Airbnb is one of the most recognizable travel companies in the world. Today, I'm here to answer one question. Is Airbnb stock ticker symbol ABNB a buy? And if yes, at what price? So you guys recall, whenever I evaluate a stock, I go through four criteria in terms of business profile, financial health, earnings and growth potential, and then finally the valuation. So let's start with the business model. So Airbnb essentially is a platform. I'm sure many of you guys use it for your vacations, right? So essentially it's connecting two groups of people. On one side, who is providing the supply, you have your hosts, people who lease your houses, your rooms, properties. And then on the other hand, you have your guests, right, who are searching and booking stays or searching for unique experiences. So Airbnb sits in the middle of this marketplace. It's acting as a intermediary or middleman, and it's earning money through two ways. One's from the host service fees, and then the guest service fees. And of course, recently they also are doing a lot of things on experiences, right? So local cooking classes, local coffee classes, etc., etc. That's how it's earning its revenue. And the value proposition for hosts is that for hosts they can monetize their underutilized space. There is protection programs that they can be on board. And for the guests, it is authentic local stays, diverse options aside from hotels traditionally. And a lot of this thing is like a network, right? There's ratings, there's reviews, people personally write them, host writes them, guest writes them. So you can always see the reviews and make an informed decision. Okay, and Airbnb as a business is powerful because it's asset light. It doesn't need to own properties or own hotels. It scales by growing its network, and that's where it's strong in. So the big question is, is this network strong enough to defend itself long term? And that brings us to the economic moat. Okay. And when I talk about moat, I'm talking about one thing. Airbnb itself as a business, does it have a sustainable competitive advantage that can last for years, 5 years, 10 years, and for the years to come? And I break my moat into five different buckets: intangible assets, switching costs, network effects, economies of scales or cost advantage, and finally barriers to entries. So first, if we look at intangible assets, I rate it 4 out of 5. Airbnb's brand is powerful. When people think, hey, let's book a home, let's book a place, people think of Airbnb, right? So there is that brand element that is on people's mind. But brand itself can be fragile if not handled well. If customers feel that the pricing is confusing, inconsistent quality, the accommodations and services provided is not good, the trust can weaken, right? And I think in recent years, a lot of people has been talking about the chore factor, right? Cleaning fees, chore lease, a lot of backlash on that has damaged Airbnb's reputation. And second, I wrote the switching costs. Switching costs, it's low to me. It doesn't score very well, 2 out of 5. And the reason is because guests can use multiple apps to book properties, and hosts can use multiple platforms to lease, right? So there is no strong switching cost element over here. What is Airbnb's network effect? And this is where I think it's its best advantage. More listings on the platform will attract more guests, and more guests will attract more hosts. So it's a cycle. But this network effect is not perfect because many listings can list on other OTAs as well, booking.com, for example. So this can make the network feel less exclusive, right? Then the cost advantage. Okay, so this one is interesting because in the past we always say Airbnb is cheaper than hotels. But what I've recently observed is that I feel like the price parity difference with hotels is not very different for short stays. For short stays, the total cost with fees sometimes can even be higher than hotels. So it's lost the low cost edge. So cost advantage here is not guaranteed, right? And of course, there's many compliance and regulations in major cities. That's also increasing all these costs and causing price hikes and eroding the margins. Last one is the barriers to entry. I rate it 3 out of 5 because I agree that it's not easy to build a trusted global marketplace, right? It took Airbnb years to build this trusted marketplace globally. But competitors can still compete regionally. And regulation is a concern over here, right? There's many regulations saying that, hey, we need to limit the number of Airbnb listings. People are complaining that, hey, my neighbors, who are they renting their properties out? Why are there people that are coming to our vicinity? Who are these guys, right? So there is a new regulation laws over here that is hurting the business and hurting new entrants. But again, I would say barriers to entry is 3 to 5. It's not easy for a new entrant to enter the market. Right. So overall, I would say Airbnb scores for me 16 out of 25, which means it's a narrow moat. So Airbnb to me is strong, but it's not a fortress, it's not unbeatable. That's why the moat is narrow. And this is important to me because a business with a narrow moat affects what price I'm willing to pay. So if we go to financial health, I want to see a few things, right, for financial perspective. Revenue growth, profitability growth, strong cash flow from operations, as well as healthy debt. So for me, on the top line and bottom line, I find it okay. Airbnb has shown positive revenue growth over the last few years, so that's positive for me. And net income has also turned positive in recent years, right? 2020, the COVID pandemic and the IPO, of course, affected its net income a lot. So you can see this drastic decline. But now with the post-COVID environment and with travel coming back, it's starting to get back to healthy levels. So next is cash flow, and cash flow to me, I have nothing really to dislike. Cash flow is growing from 2017 to over the last 12 months. It has grown quite a lot, right? And it's on the uptrend. So that to me, it's good because cash flow, like I mentioned, is the bloodline of the company. It's what pays the bills, it's what fund buybacks and builds resilience for the company. Okay, balance sheet wise, on terms of debt, to me, debt is so healthy for this company. Debt to equity 0.2. This company is basically not even using much debt. It's below 1. In fact, I would challenge them to say, hey, if you need to use debt to, do some investments, they can do so, right? And but I understand why it's 0.2 because when I look at the net debt to EBITDA, it's negative 3.6. This means it's basically the company has so much more cash than debt, right? It's cash rich. So in this case, they can always use cash to fund whatever they need. Current ratio 1.4, this is very good to me. It means it's very liquid. At any point of time, it can always pay its short-term liabilities by selling any current assets if it needs. Okay. So conclusion for me, that is super healthy. I have nothing to dislike about that. And this matters because travel is a cyclical business, right? When recession comes, travel will definitely slow down. So a strong balance sheet makes sure that Airbnb can keep its business resilient over the long run. Right. So looking at this, we need to, of course, look at the growth, right? The growth of the business. Do analysts estimate that it's growing? And for most good quality companies, 8 to 15% is strong. Okay. And from finviz.com, it is saying that, EPS over next year is 26%, over the next 5 years, 15%. So if that holds, is very solid for me, right? I have nothing to complain about. But growth is not guaranteed, of course. Regulation risks are there, competition risks are there, and that can pressure Airbnb's margins, right? So I treat this as a base case estimate, not a promise. Valuation wise, this is the one that's important. And valuation, I use a discount rate of 10% because it's a cyclical industry, cyclical stock. The perpetual growth rate, forever growth rate that I'm looking at is 3%. Free cash flow is 4.5 billion. So I estimate 10% growth over the first few years, followed by 8%, and then perpetual growth rate of 3%. Right, using the cash and cash equivalents of the business, the total debt, I arrive at an intrinsic value of $173. Okay, but if you look at it, my margins of safety is 25% and my personal buy price is 130, which is pretty near, right? But why do I have such a big margin of safety? It's because Airbnb to me is a narrow mode business, right? My simple rule is that I want a large margin of safety if it's a narrow mode business. I want to buy at a discount. The more stronger and more defensive the mode, the less discount I need. The weaker the mode, the larger discount that I need. Okay. So 129 is my buy price. And for me, when market opens on Monday, I will start to open a very small position in Airbnb, probably like 5 shares, 10 shares. Okay. And I'll look to accumulate, and if necessary, if price declines even more, I might sell a cash secure put in like 125, 126, and start to do the real strategy on Airbnb stock. Right. So let's wrap this up and compare with Morningstar analysis, which is a good practice, right? So I look at it from Momo's platform. It's not sponsored. So for them, for the Morningstar team, they read economic mode as white. So they are more positive and optimistic than me. Okay. Fair value, they are rating at 154, which is pretty much similar than me, to me, sorry. So I feel confident in my assessment of this company. So to summarize, again, not financial advice, do your own homework. Mode analysis 16 out of 25. Narrow mode. Financial health, it's good for me. I'm happy with it. Positive revenue, positive net income. Cash flow is solid, it's positive and growing. Debt is nothing to complain. In fact, I would say they are so cash rich, they can take on debt if they need to. In terms of the analyst EPS growth estimates, is 12 to 15%. Again, this is the base case. It can go lower if there's any regulation or competition risk. Valuation, I rate it at 173 or fair value. Personal buy price 130 because I want a large margin of safety for such a cyclical narrow mode company. Okay, so verdict simple. I like the business. I like the balance sheet. I respect the mode. It is not a bulletproof mode. I get only excited when I have a large margin of safety. I'm getting it now because Airbnb is around $132. So I will start a small position. I would sell a cash secure put at 120s if it goes down. And I'll look to DCA as over the next few weeks, next few months, depending on what the price action of the stock is. So I want to hear from you guys. What price will you buy Airbnb at? What's your bull case? What's your bear case? So do help me to like, share, and subscribe. And I'll see you in the next video. Do help me maybe put in the comments what stock you want me to look at, and if I have time, I would personally study them. All right. I hope this video is great for you. Again, have a great weekend.